All right, everybody, welcome back to Health, Wealth, and Lamborghinis. My name is Jason, and today we are going to be taking a deep dive into my entire portfolio. Now, it has been a couple months since we've done one of these videos, and actually there has been a lot that has changed over the last, 6 or 7 weeks. However, I am really happy with where my portfolio is at right now, and if you guys are like me, we're probably in the green, right? The stock market has been on an absolute rip. We're at all-time highs. Everybody and pretty much every stock is looking pretty good. So let's just jump right into it. Now, first thing is first, we have to jump into my responsible Roth TSP 401k that I have with the US Navy. Now, we are so close to hitting $100,000 in this account. Now, right now, we are sitting at $95,589. I think we might just make it there by the end of the year. I will continue to dollar cost average every month into this account. And, fingers crossed we can hit that magical $100,000 mark by the end of 2024. But I'll need a little bit of help from the stock market. If we can rally just 3%, 4%, I think we might actually hit that. Now, what's special about this account is this means the most to me, right? I have more money in my brokerage account, but this didn't come from selling a house or inheritance or flipping a car or anything like that. This is just day in, day out, month out for years, dollar cost averaging through my work. And so to see me being so close to the $100,000 mark, I know when I hit retirement age and I start to draw on this, we'll be well over $1 million, hopefully, in this account. And, just to know that that's there in the background, continuing to work for me, it does give me a little bit of peace of mind to continue throwing more and more money at my dividend portfolio, because I'm pretty sure that my normal quote-unquote retirement fund, my main nest egg, will be fine. So we're right there, 95,000 and some change in that, and I couldn't be happier. Now, that's all in the S&P 500 for you TSP people. That's the C fund. This isn't financial advice, but just putting it all in the S&P and letting it ride. It feels pretty good. So we'll see. So fingers crossed, 100K by the end of the year. So now jumping into my Roth individual retirement account, I have this with Vanguard, and like I said, maybe 7-8 months ago, I am 100% in on SCHD. You can see here this account is valued at a little bit over $15,000. And total profit here, almost $1,600, which is actually pretty good. Dividend income, we're looking at about $430 annually. Now, what's great about this, again, because it's in my Roth IRA, all this is tax-free growth. This will all be tax-free payments when I actually turn old enough to take it out. So I'm very happy about that. So jumping in, the only holding I have here is SCHD. And you guys can see the stock price is actually pretty low here at $28.54. That is because just this week, SCHD did a 3-for-1 split. So I think before the split, I had somewhere around, 150 shares. Now I've got 528 shares of SCHD, which is absolutely crazy. When they announced that split, I was just kind of over the moon. This is the first kind of stock split I've experienced, with some education as an investor. And to see my shares, go from like 150 to now 528 shares. And, every quarter when they pay, I just reinvest that, So by the end of the year, I'll probably have 540 shares, maybe even a little bit more. And then next year, January will come around. I'll max this account out again, and we'll just keep getting more and more shares, and we'll just be buying more with the dividends that we receive. So very excited about that. Yield on cost, I'm making about 3.1% on my money, which is actually pretty good. This year, I've already received $325 in this account. And again, total profit of about, just under $1,600, again, tax-free, which is really nice. And you can see that since the split, SCHD is now at an all-time high. So I assume that the stock price is going to be, just continuing to run up. You can see my average cost per share is just over $26 per share. And now we're at $28. And again, I've got 528 shares. So do the math. That's actually a pretty good return. It looks like 11.3% return from my Roth IRA. So very happy about that. Now, obviously, I won't be able to touch this money for quite a few years, but it's nice to know that this is in the background working, and I'm very comfortable with, I've got so much S&P 500 in my retirement account with the Navy, so I'm fully comfortable going all SCHD on my Roth IRA. So, could I do a little bit better? Who knows? But I'm very comfortable. I sleep well at night with these two allocations because this is the majority of my money ultimately. So now moving on to my Vanguard brokerage account. You can see I've got about $204,000 invested here. Total profit just under $20,000, $19,298. And this is, ultimately maybe 7-8 months or so. So not too bad. And we're generating a yield right now of 3.38%. And this is skewed a little bit because of my cash position. However, we are actually getting a pretty good dividend return. You can see annually right now we're set to make almost $7,000 this year just from dividend income alone. So very good. So let's just jump right into it. You'll see my main, my core funds here in this account. Obviously, we're sitting on a little bit of cash here, $90,000, almost $91,000 of cash, and I'm just collecting that pretty good interest. And I think right now this money market account is making, I don't know, maybe just under 5%, so pretty good. So I'm not in a rush to pull that money out. However, I am looking for opportunities, right? When something dips, I buy, just plain and simple. So it's nice to have that there just in case. And then my largest position here, kind of just like everything else, I've just got some S&P VOO. We all love this. I've got a little over 50 shares here. And look at this return of 13.5%. Now you'll say, well, the S&P has done 20% or something this year. And I didn't buy into the S&P till April or so. So that's why it's not the full year of return, but I'm pretty happy with that. And then a position that will become one of my larger positions in this portfolio is VYM, Vanguard High Dividend Yield Index Fund. And you can see here I've got just over 42 shares. I actually really like this. This is a similar position to SCHD. However, from my limited experience, I've noticed that the share price appreciation for this is actually much better. You can see here my average cost per share, $115. And right now the share price is actually $130. So where SCHD only ran up about $2, this thing has ran up $15 or so. And so while the dividend yield is not as high as SCHD, I still believe in all the holdings, kind of the thesis behind the portfolio. And the dividend, the overall growth, just share price appreciation has been actually pretty fun to watch. And you can see here, we've appreciated right here, including some dividends, over 14%, which is actually pretty good. Sitting on just over 42 shares, like I said, this is making up almost 3% of my total portfolio, making about $153 a year. We've already picked up, almost $70 in dividends. And, I do plan on, I'm buying the most of this. Whenever I have, a couple extra bucks or whatever, I am actually buying into VYM. And this will become the largest position, I think, in this portfolio over time. I'm just not really rushing into it. If we see a crazy pullback or so, I'm happy to throw a decent amount of money at this. So that is my three kind of ETF funds that I have with Vanguard. Now let's jump into my individual stocks here. So consumer discretionary, where you can see this is actually the largest category in my portfolio, sitting over $25,000. Just in general, this is up almost 17%, which is actually pretty good, and making up over 12% of my portfolio. Let's jump in and see what we got here. Of course, we got Starbucks. Now, I'll tell you right now, you guys know I love the flat white, this true story. And they had the crazy dip. I bought a decent amount of it. I'm at over 126 shares now, up 20%, almost 21% on my Starbucks position. Very happy about that. You can see I was buying down here in the 70s, and obviously it's just ran up crazy with new management, new leadership. Again, over 126 shares. Starbucks is paying me almost $300 a year. That'll all be reinvested. Yield on cost just under 3%. Very happy with that for Starbucks. Making up 6% of my total portfolio, which I'm fine with. And we're sitting in the green, like I said, 20%, almost $2,100 of profit. We already got a pretty good payment from Starbucks in the amount of $113 this year. And I'll just be happy to keep collecting these dividends, actually, because I do like the company and I love the flat whites there. So next up, we have Home Depot, another company that I really like, I'm really into. And you can see, look at this, 22%. I don't have as many shares as I wish I did. I've only got 17 shares of this. My average cost in the 330s, share price now $4.11. So just a massive, massive run up on this. And, so sitting at just a little over 17 shares, current value about $7,000. 3.5% in my portfolio, which I'm totally fine with. I wish I had more. I could have, should have, would have bought more. We all have those feelings. But very happy with this. I figured, at the beginning of the year, I assumed that when interest rates started to fall, which they have, companies like Home Depot were going to prosper, and they did. I should have bought more, but just 15, 17 shares, it's $7,000. So they're paying me $150 something a year, pretty good. They've already paid me almost $40. Again, 22.5% in the green. I couldn't ask for much better return on that. $1,300 in profit. And I assume that this stock is just going to continue to run up. I know analysts are pretty bullish on the stock. I'm seeing like 450, 460 price targets. I'm just going to hold, continue to collect the dividends. And if we do get a pullback for whatever reason, interest rates don't go down, maybe they go up, inflation does something weird, I'll buy more. And then my last consumer discretionary stock is Nike. Now, they did take a pretty big dip, and I had to pick up some shares. I got 75 shares of this. My average cost isn't too off where it's at right now. Just under $80 here. Share price is 82, so we are in the green. Nike does pay a pretty good dividend, almost 2%. I should be expecting about $111 a year. Again, on 75 shares, that's a little over $6,100. I will say, though, I've seen this share run up, the share price run up to as much as $88, and then I was like in the green kind of a lot. But, to see $188 of profit and, 3.2% gain, while I collect the dividends, I'm happy about that. And I do think that Nike, they've got one of the strongest brands in the world. We'll just be very clear about that. And I've seen some recent pollings where, young kids still really like Nikes. And I don't think that they're going anywhere. I think the new management is going to turn this company around. And I'm happy to hold this for the long term. I feel really good about my position here. If it does dip a little bit more, I will add a little bit more to this position. I'm not going to go crazy here, but I could see bumping up to maybe 100 shares or so of Nike. So pretty happy with my decision to get in. I wish I would have jumped in a little bit earlier. It just took me a while to kind of get comfortable with the idea of Nike for whatever reason. I saw the share price dip to the low 70s. And I was still on the fence, and it took me into the mid-high 70s to actually jump in. But I'm in now, and I feel pretty comfortable about it. So next up, information technology. I only hold 2 stocks in here, and you can see just in this category alone, up over 21% in the green. So obviously, very happy about that. Let's just jump in and see what we got. 2 companies, Apple and Microsoft. I don't really need to say too much more about this. Jumping into my Apple position, I've got, let's see here, I've got over 35 shares here. Over 30% in the green while collecting a yearly dividend of $35, which isn't that much, but Apple is a company that grows their dividends. They buy back shares. I believe in the company long term. I use their products. I'm using their computer right now. I've got 4% of my total portfolio here in Apple. My average cost, $175. I was buying kind of that dip maybe, where was I buying? Yeah, I was buying down here in April, May, And of course, they've ran up with all the AI stuff, and to see 30% profit on my Apple position, I couldn't be happier. I saw a pretty big dip, and I went for it, and it worked out for me. Would I have liked to buy more shares? Of course. I got 35 shares of Apple, almost $8,000 worth of value here. Again, 30% in the green. Pays a pretty good dividend here. No complaints here. Apple, no issues. Long term, I'm fine. Not selling. Next up, Microsoft. I wish I had more shares of Microsoft too. Microsoft has been up and down, up and down. You can see over the last 6 months, just up and down, up and down. I've got just over 15 shares valued at 6,200. Not crazy. 3% of my portfolio. We're in the green just a little bit, 2%, but that could change like this. I bought at 407. I watched the thing run up to 460, obviously way in the green then. It's came back down. It's, went back up a little bit. It's paid a little bit of a dividend, $50 a year from one of the biggest companies in the world. Not too bad. They've already paid me $20. Just reinvest that money, of course. If they do take another dip, they dip below 400 or so, I'll probably add to my position here. But I can't complain. Sitting in the green, they're paying a dividend. I like the company. Yeah, Microsoft. Not much more to say about this company. So back next up, energy. And let's see. Energy, we are sitting in the green here at almost 7%. About $800 profit here. Let's just see what we got here. Chevron, 80 shares here. Now, Chevron took a crazy dip recently. They hit 52-week lows. Don't pay attention to these little dots. I did do some buy and selling, but I bought down here, in the 130s. I think I was buying. 142 is my average cost. Picked up 80 shares. They pay a great dividend. I mean, almost a 5% dividend here. I should expect to make about $521 per year with Chevron. I don't think they're going anywhere anytime soon. I know we're kind of transitioning to electric cars and blah, 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 whatever. We're going to be using, gasoline and fossil fuels and things like that for a long time. And depending on who wins the election, this stock could go way up. And even if it goes down, I'm still collecting a good dividend. Right now, I'm sitting in the green, 6.5%, $700 in profit, and $521 per year. At a share price of $142 or $150. This is like three shares a year extra. I'm going to be getting for nothing. So I'm going to continue to keep an eye on this. I'm at almost 6% of my portfolio. I might add to it if it dips. If we see another drop into the 130s or lower, and this dividend yield goes up over 5%, I might add a little bit more. But right now I feel comfortable with the company and happy with my position and the profit I've made on it so far. All right, so just a couple more things here. We got some financials here. $11,000, up 4% in this. Let's take a look. Visa. You guys know Visa is just a fantastic company. I use their products all the time. Every card in my wallet, I think, is a Visa. And I just think long term. I mean, take a look at this graph. Long term. I mean, this thing just goes up and up and up. I am seeing a little bit of a profit here. 40 shares. I am up almost 4%, over $400, which is great. Again, this kind of goes up and down. When this is at 290, or we might see 300 on this stock pretty soon. But they're going to, they've already paid me $31 in dividends yearly. $83.50 or so. 5% of my portfolio. I don't know if I'll add any more to this right now. If we see a big pullback, 250 or something like that, I will probably buy. But right now, I'm just happy to own it. I'm going to watch this appreciate long term. We'll probably see some splits or something like that. I think Visa is a great company, and they're always dealing with like these regulations and laws and things like that. But I think they're going to be fine. Unless like crypto just dominates the world. But I don't think that's going to happen anytime soon. And Visa is probably already thinking about it or poised to be in a position where they will be able to capitalize or get in on that market too. So I'm not too worried about it. I'm very happy with my position in Visa, and I'm just, excited to watch it grow. Next up, industrials. Let's see what we've got down here. We are up in the green here, about 5%. Waste management. Yep, we got 50 shares of waste management. So I am in the green here, about 5%, about $500. They pay a pretty good dividend, about 1.5%. They do grow their dividends. Let's take a look at that. Let's take a look at their dividend growth here. Yeah, you can see, just steady growth of dividends here. So, I'm very happy about that. 50 shares, $200, pay me $150 a year. That's almost enough to buy an entire share of this. And I'll be honest, like when waste management comes to pick up my yard waste or my garbage or something like that, I do get a little bit of satisfaction into seeing that truck with the logo, the WM logo, knowing like I own a little bit of that company. It's pretty good. It's a great dividend payer, great dividend grower. Long term, no matter what happens with anything, we're still going to be generating garbage, and yard waste. So I'm happy to own this company, to hold this company. It's sitting at over 5% in my portfolio. I probably don't need to add too much unless we saw a crazy pullback. That's why I'm sitting on that cash position. If this thing tanked for whatever reason, I'd be poised to jump in and increase my position. But waste management, yeah, pretty happy with this actually. So now moving on, real estate here. We have got one REIT in my portfolio, and that is ticker symbol O, Realty Income Corporation, sitting at over 76 shares. Pretty good, actually. Total profit, 20% in the green. Could you ask for anything more? My yield on cost, my dividend yield, 6%. Now, of course, I've been buying this. Look, I was just buying this low 50s. I think I might have got in at the 40s one time, maybe not. But low 50s, I was all over this place. 51.17 was my smallest buy there. But 6%, over 6% dividend yield. They pay a monthly dividend, and every year they're going to be paying me $242. Now, this company does increase their dividends year after year. You can see this graph just goes up and up and up. And I'm very happy. With interest rates coming down, I think that a company like Realty Income could benefit to do very well, as most of their business is about financing and renting out real estate from my understanding. 76 shares, again, just 2.3% of my portfolio. I wish this was double. I wish I had 150 shares of this, and if we see a pullback into the mid 50s or so, I will increase this position and boost this up. But right now, I'm not adding to the position, although I am letting my dividends reinvest themselves and picking up more and more shares. Every year they'll be buying, I don't know, what is this, 4 or 5 shares, 6 shares every year just from doing nothing. So it feels pretty good. And every month to see that check come in is pretty cool. This is the only stock that I own that pays a monthly dividend besides my money market account. So that's actually pretty cool. And then we got one more thing down here. You see this other, right? And you can see we are in the green 33%. Now, don't judge me here, but this actually is not a dividend stock, okay? This is Kava. Now, for those of you that do not know, Kava is a food chain similar to Chipotle, but it's more Mediterranean, healthy Mediterranean. And so I went there with some of my family and their investors, and they were looking at the company to buy in, and they ultimately bought in very big positions. And I said, okay, I'll buy 25 shares just to see what happens, to just kind of have fun with my family a little bit and see what's going on. Now, I bought right at $100, 25 shares, and so that cost me $2,500. And of course, the share price is just blown up 33%, making almost $1,000 in profit so far on this. And, if this stock does anything close to what Chipotle does, which is what the analysts are expecting, because it is actually a good restaurant, this will prove to be very, very profitable. I'm not really sure what my goals is long term with this. Again, it doesn't pay a dividend, so it might run up like crazy, and maybe I dump it and get more VYM or something like that. But right now, it's fun to kind of text my family and be like, "Yo, Kava is on the move," and just to see that go up and up and up and up. And again, they don't pay a dividend, so it doesn't really fit my investing thesis. But yeah, just to see 33% in the green, crazy. This stock just year to date has just had a huge run up, 210% year to date. I got in at 100, so we'll see what it does. I don't know. Do you guys own any kava? I don't know. I am gonna go eat at the one in Jacksonville soon. I've only been to the one in San Diego, and I'll tell you right now, it was packed with pretty like good-looking, young, healthy patrons. Everyone seemed to have a pretty good time. Everyone was enjoying their food. I thought it was good. They have unlimited options. It looks like management is good. So I'm going to go eat at the one here in Florida just to see what the vibe is, whatever, support my company a little bit. But yeah, happy with my position. It doesn't pay a dividend, so it's, man, what am I doing really? But 33%, come on, very happy with that. So that's it. That's my entire portfolio, investment portfolio. I do have a little bit of crypto, maybe $1,500 or so in crypto. I might add to that, later. I don't know. We'll see if it dips again. I will buy a little bit more crypto, but I would like to have one Bitcoin, but I'm not going to spend 60 grand on a Bitcoin right now. More power to you guys. If you guys own a bunch of Bitcoin, cool, great. I do think long term it's a good move, but I just have a little bit right now, just a little bit. So now grand total, I think we're pretty much invested a little bit over $315,000, which I'm feeling pretty good about. Maybe in the next year, 2 years, maybe we'll reach $500,000 invested. That would be pretty crazy. I could sell like a car or something and maybe get a little bit close to that. But, right now I'm just going to continue to just invest when I can, reinvest all the dividends, obviously continue to dollar cost average into my retirement account at work, and just kind of see what happens, But $500,000 within a year, 2 years, 3 years, I think that's actually possible. So again, sitting in the green just in this account, $20,000, pretty good. Passive income, $7,000 annually, not too bad. And you can see that money has gone down. My monthly dividend income has gone down just a little bit because I have been taking some of my cash and putting it into lower dividend paying companies. Like when I pulled out, whatever it is, 10 grand to buy Apple, I lost, that 5% dividend payer via my money market account, and Apple only pays like 0.5% dividend. So obviously my dividend income is going down, but I think long-term profits and dividend growth is going to go up in the long run. So I have, I'm not concerned. Eventually this is going to, even out here. We can see that in March made $1,200, and then in October, we're sitting at, we're still in October. So in September, made $650. So my dividend income has gone down by half. I do think that we're going to see that, once my cash is deployed exactly where I want it, we're going to see that bottom out at, the $400 probably a month. And then it's going to start to go back up, and the hope is, the goal is long term, 2, 3, 4 years, we're back to over that $1,000 a month, but all in like companies that, that I really believe in, that are growing their dividend, that are growing their share price. I'm not just like taking the 4 or 5% interest from my money market account and counting that as dividend income, because that ultimately, it does kind of grow and compound, but not at the rate, that you've seen some of these companies in here, like Home Depot has just gone crazy, Apple, Visa to a point. Like these companies long term are going to pay way more than the money market account. And so I'm happy to see, my income go down a little bit, and then it's just going to go back up. So kind of a long video here. Now you guys got a full deep dive on my $315,000, portfolio here. Feeling really, really good about my positions. I don't have too many holdings, 10 or 11, 12 holdings or so. You guys know in the last video, I sold a bunch of positions, and now this allows me to concentrate a little bit more, because like I said, I would rather have, like 5 to 12 like real massive positions relative to me than 30 positions with just like a little bit of money or just a few shares in them. So I'm just going to continue to add when I can, where I see pullbacks, where I see dips. I'm going to add to these positions and just see what happens long term. But I'm very happy with my portfolio right now, and I'm sure you guys are too. Like right now, over the last year, 2 years has been a pretty easy time, I think, to be an investor. Because we've just seen the market go up. That's not going to happen forever. I really haven't experienced a down market. Every time I've seen a little pullback or dip, I just bought. I didn't really mind seeing something in the red briefly. I haven't seen a 20% drawdown, 30% drawdown on my portfolio. So hopefully I'll have the fortitude, just to keep buying and everything. I'm sure I will. But it's been just a good couple of years, I think, to be an investor. So very happy with how everything's going. That's it. I'll see you guys in the next video.